Base metals have been one place to be in 2016, or certainly part of it, and it's caused a big rise in some of these mining stocks. Russ Mould, the investment director at AJ Bell, joins us now with some more. Hello, Russ. Base metals, why? What's going on in the sector?
Well, I think people have attributed a lot of it to the Trump effect, to the new president-elect. But if you actually look, mining stocks in the UK really have been incredibly strong all year through, and the effect has become more profound since the EU referendum vote. So I think it is linked to Trump, but it's this move from monetary to fiscal stimulus, this move towards infrastructure spend that you also saw in China in the spring. I think that was a big feature of the stimulus package there. So I think it is this public spending message, but it's not just a new thing in the autumn. It's been running since the Chinese in the spring and the British in the summer.
What about a stronger dollar, though? That has an effect, doesn't it, on this? Because all base metals are priced in dollars.
In theory, a strong dollar is bad for commodity demand because it makes them more expensive for people who don't spend in dollars. But that's one of the intriguing reasons. I mean, the dollar was weak, or didn't go up as much as people expected in the first half of the year. The recent rally, under those circumstances, yeah, it's been quite surprising to see how strong base metals have been. And oil is another example, perhaps. So again, people at the moment are buying into this reflation, growth returning trade. I think that's been a constant factor through the year, again, not just starting 7 days ago.
So what about the stocks to watch? I mean, we've seen the sector move up, but are there any particular stocks to watch when you get copper, nickel, zinc, base metals rising?
I mean, there are some naturally big proxies. I mean, Glencore is one that a lot of our clients and customers have latched onto this year. I mean, it's an intriguing stock in that the heart of it's actually the trading operations, where the earnings have been remarkably consistent. But to buy into that theme, you've got to believe that Mr. Glazenberg's traders are going to be smarter than everybody else's traders forever. But so far their record's very good, don't get me wrong, but you've got to be aware of that and the fact there's pots of debt in the company. Looking at copper, you can look at Antofagasta or Vedanta Resources, for example, Rio Tinto and BHP, a big plays on iron ore, which has gone up like a rocket this year, although it dropped quite sharply overnight. So certain stocks will play into certain themes. Even then you can then dive down into AIM and the real tiddlers. Savannah Resources has got an interesting copper deposit in Oman, for example. It's never produced an ounce of copper in its life, I hasten to add, but the initial reports look quite good. So you can play it through big caps or you can play it through small caps. And if you really think that the prices are going up, it's almost the smaller stocks that offer more leverage into the price increase, but clearly the danger is they're going to go down a lot quicker if the prices roll over again. So it's really where your appetite for risk lies.
Do you see some M&A in this sector, the mining sector, as a result of this?
Yeah, there's not been as much as you would have thought, given that in oil you have seen talk of assets changing hands, and you've seen in oil tremendous capital discipline and actually, oil field plans postponed. Mining, you haven't seen that. You've seen capital discipline, you've seen dividends cut, but the supply dynamic is different. It's not like just switching an oil rig off, although that in itself is a nuisance. Once the mine has begun, you're really getting on with it. So I think the difference between mine and oil is there's actually still a lot of supply of these things coming on. You have seen certain individual dynamics, like with nickel and Indonesian exports, for example, but generally the mining supply is, if anything, still growing. So that's much more a call on growth and reflation and infrastructure. I think the oil thing has been much more about supply and capital discipline. So there is a difference between the two.
And your clients are placed for positive year for next year for base metal?
I mean, looking at the flows, there've been a consistently strong buy on individual stocks all the way through the year, and also through a few funds as well, for example, which specialise in this particular area. But they've been a very popular area all the way through the year.
Yeah, OK. Russ, thanks indeed.
Pleasure.
It's a pleasure as ever. Russ Mould, investment director at AJ Bell.